Mark, just double checking your follow-up comment as far as interpreting the info, and you heard my take on it, so feel free to follow up if you'd like. But I think that your question that you're asking, I don't even know how to answer it because I don't know that there is a way to interpret anything like that accurately. There's always something else you're not going to know that's not in the report and what have you. So for me, again, just to repeat, the way I interpret it is just based on the price action itself. Okay, good. And also my reliance on the trade plan, right? Because I'm not just coming in here and looking at, oh, it's going up, do something or whatever. I'm using a strategy that's interpreting the price action for me that I've already tested and proven and understand the results, that I can hit the goals by quitting positive most of the time. I mean, I have a lot of information already on my side, and that's regardless of whatever the report comes out with, because I'm just interested in the price action and the strategy that I've proven. It keeps things simple, right? Because then I don't have to worry about stuff like that where there's no solution to it anyway. And we're going to put that concept into practice as we typically do. In the next moment or so, we'll see the reaction when the crude oil comes out, when the report comes out. Just to quickly look at the pattern so far, this was all the noise that happened this morning when we first started. The strategies were able to navigate that pretty well with power of quitting and then getting out of the way, looking like trying to find a bottom down in here. Probably a good idea to mark that so we know where it is. And now kind of back up into the middle, the bottom side of that range, and then the report about to come out, and we'll see where it goes from here. And it did spike through and make a new low. That was pretty remarkable, wasn't it? What's that, like a 40-cent move in the blink of an eye? And now it's just going to kind of do its thing, going to mark the reaction range. What we don't want to end up doing is get stuck with small little trades in the middle of this range. Hopefully it'll break out and start moving right around when we start taking trades would be nice, but it doesn't always work that well. But that's the reaction range. And we're right in the middle. So nothing unusual there yet. A lot could happen in the next minute or so. Keep an eye on the clock. So that green trade would have to get to, a new range, break out to a new range to hit its target. So that technically is a trade we can get in sync with. So we got to keep an eye on it. 67.92, and now there's a new short, and that's at 67.79, and we got about 5 seconds to go. So that trade looks like the trade will end up taking 79 if we can grab it. Yeah,
Order
79.
filled.
That's the short, and it's targeting 62, which is a new low of the day, and the stop is at 01. So let's see what happens. Money management just got hit. Lock in your one tick and grab that risk-free position. And let's see, it's bouncing off the lows here. It's going to try to make another attempt to get through it. And it did just get through it by only one tick, and the stop moved down one tick.
Order filled.
And that's full target, guys. So move your stop down to 68 if you're trailing, and hopefully we pick up a nice strong move down here. Missing target 3 by one tick. Can we pick up a stronger move lower? So you could leave your stop at 66 at this point. Looking for a nice little, hopefully a bearish consolidation that we can break through. Stops at 66. If it closes below that line, our stop will move to 62. I'm going to go to 62, and you could even go to 63 if you want to work around the other spike to the left. It's up to you, 62 or 63, and looking for a push lower.
Order
and
filled.
Not going to get it. So it's finished. That trade's over, and we're one and done, and that's how it works. Don't think, you just do. That's how trading needs to be, really. You just got to react to the strategy and to the trade plan and not let yourself get in the way. And we see that over and over and over again as often as this thing wins. It's just a great example of the style of trading that we do with all the markets and charts, right? They don't all work as well as this. This is definitely unique. I wish it wasn't just once a week. But It's a great microcosm example that you can model your trading after with everything you do. All your trades should work like this. Doesn't mean they're going to win as often, but the point is, it's the trade plan gives you the thing to do, and it's your job to execute the trade without having to worry about it. If you're worried about it, then you're just not ready to trade whatever it is you're trading. You have to use that idea. You're worried about it. Okay, what does that tell you? Well, it tells you the next thing you have to work on in order to become a successful trader. So it's really valuable, the feedback that you give yourself. That's why I always say the number one indicator that you should be relying on is what the guy in the mirror is telling you and how you feel about what you're doing and what your actions tell you, because that really reflects what you actually believe. And you have to believe in what you're doing or you'll never succeed. So it's all there, all the information you need. All right, so that's a wrap, guys. Any questions?